Secretary of Economic Development is planning a trip to Asia later this year, right around September and October. And we're here to reach out to this part of the world to sort of discuss, potential collaborative opportunities, for further discussions when the Secretary is out here on his tour. But we thank you for making the time. I'm sure you all have very, busy positions, for making the time, for being here to listen to us about what Puerto Rico has to offer.
Thank you. The introduction to Puerto Rico, most of you know where we are, and this is just so that we can show a free map. This is Puerto Rico vis-a-vis the rest of the region. Here we go. We're centered around, or at least it's very, logistically, very easy to get to the U.S. and Latin America and Central America. We offer markets that you are also seeking to enter. What we give you is access to both of these markets. We give you bilingual workforce. We give you a really generous incentives so that you can have operations in our western region out of Puerto Rico. And it's very easy to get from here to Miami. In no time you're in Puerto Rico, from Puerto Rico to Miami, Panama, or Venezuela. A lot easier for you to get from there than from the East Coast to Central America, or from the West Coast to any parts of Latin America. We are considered a middle-income country. Of course, our GDP per capita is not as high as Singapore, but in relation to the rest of Latin America, our GDP per capita of $24,000 is very stable and very strong consumer base. Our main industry is the manufacturing, and that's for export related. Government is a substantial part of our GDP composition, but we are in the manufacturing sector, and this is an area that we would like to further develop, and we invite companies from abroad to take advantage of our very generous FDI incentive law to further develop this region. The difference between the GDP and GSP is very interesting. Would you, Joanna, would you explain to us?
I think the difference between the GDP and the GSP, which is about $33 billion, gives you a sort of look into how the economy is structured in Puerto Rico. You have a lot of foreign investment, and this is primarily what causes the difference. Basically, the value of the production that takes place in Puerto Rico versus the value of the production that takes place in Puerto Rico and are owned by Puerto Rico. So you see a difference of about $33 billion right there that's due to the value of the production that are owned by foreign nationals. So a lot of foreign direct investment, a lot of production that's a result of those foreign direct investments.
Thank you. This is what we meant about our strategy. We've been the victims of our own success. We haven't had, for many years, to go out and promote ourselves as a destination for investment, because companies were already coming to us. Companies from the U.S. were investing and were looking at us as a place where they could relieve their tax burden from the U.S. IRS, and it was a good place for them to also acquire high-quality workers with a much lower cost. As of recent, we realized that we need to diversify also our investments, and so we've strengthened our foothold in Europe and have begun to be more proactive and engaging with Asia. And this is the beginning of that strategy, something that we would like to continue developing when we bring the Secretary of Economic Development later on this year. We would like him to meet you, and we would like to also bring you to Puerto Rico and we're collaborating with IE Singapore so that we can bring a strong delegation to Puerto Rico to see where we are and what we have to offer to you. So, from the beginning, we will tell you what we are not. And you've seen the slides very, very much so. We cannot compete. We're not China. We don't have very low. I'm sorry. This is why you should be here. One is to diversify your investments in Asia. And this is something that you've done so well since 1997, when the economic development, the economic crisis, and you see yourselves also entering the U.S. and Latin American markets. And why would you want to be in a place where, if you invested in the U.S., you would have access to the U.S. markets? If you invested in Brazil, you would have access to South American markets. If you invest in Puerto Rico, you have access to both. And the same could be said about Miami, but really, Puerto Rico has the ability to transcend those borders. And you have fully bilingual population that is able to work in both markets. For some companies, and I see that may not apply necessarily to your company, we offer U.S. FDA certified facilities for pharmaceuticals. So this is very valuable for some companies that would like to make pharmaceuticals that are made in the U.S. and have the same ability to enter U.S. markets and also sell themselves abroad as made in the U.S. pharmaceuticals with the same, at least, goodwill that comes from a product that is made in the U.S. We minimize your political risk and economic risk. I will show you a league table as to how we stand with the rest of the Latin American countries. And initially, when you start thinking about investing in Latin America, you don't think of Puerto Rico, but we'll show you how it is that Puerto Rico stands against the major business-friendly countries of the region. And we have very high-quality human resources. We understand that in Singapore, one of the difficulties is finding, you have a shortage of workers. The Wall Street Journal reported a couple of weeks ago that this is driving up your inflation. What we have in Puerto Rico is that we have very highly qualified individuals, but they're leaving because there aren't enough jobs to be found in Puerto Rico. You have access to these individuals at a much lower rate than if you were hiring them in the U.S., continental U.S. And it's at a much lower cost than if you were hiring your local highly trained individuals in Singapore. This is why I skipped myself. So this is what Puerto Rico is not. We don't have the lowest labor costs. We don't compete with China. But you do get highly skilled, technical, bilingual workforce with U.S. citizenship. And that's a premium. We don't have the lowest transportation costs. But neither does Singapore. We are an island, and we rely on marine transportation. But some of the goods we do send through air cargo, and that's just the nature of those precision equipment that are sent out by air and not ship. However, we do, and we're trying to develop further our port facilities so that we can mitigate those costs. We have a higher electricity rate at 18 cents per kilowatt hour, somewhat higher than other U.S. jurisdictions. However, we do offer tax credits to mitigate that high energy cost. So this is the value proposition for East Asian companies. And this is something that I'd like you to spend some time looking at. Ernst & Young developed this model and had a comparison between what it would cost to have an operation in these 5 jurisdictions. When we were asked about what is investing in Puerto Rico or anywhere, the first thing that comes to mind is how much is the labor cost? Well, Puerto Rico follows the minimum wage of the U.S., which is $7 and change. And if you compare that to Costa Rica, which is 2.5, initially you think, well, it's much cheaper to have an investment in Costa Rica. But you have to put all the pieces together. You have to put the transportation costs, the electricity costs, the labor costs, and all of the different incentives. And in some countries, the incentives only are good for 5 years and they gradually start coming down. In some countries, it's 10 years. But if you put it in a 30-year time span, the numbers start to make sense. This is Puerto Rico. And in pharmaceuticals, our cost per dollar, if this is the benchmark, we're much lower than any of the other jurisdictions. For medical devices, we're somewhat higher than Costa Rica and Mexico, but you would have imagined that this difference would have been a lot bigger, but it isn't. R&D, we don't come off that bad. Costa Rica beats us, but then think about the cost that you have to put in to train those individuals. In Puerto Rico, you probably wouldn't be investing that much in the retraining of individuals to get them up to your standards. And in software publishing, this is something that also Singapore has a strength in, and you see that we are a little bit less expensive than Mexico and not so much more expensive than Costa Rica. And I compare us to Costa Rica and Mexico because we have to compare ourselves with the other jurisdictions that are also selling themselves to you as destinations for investment. But look where North Carolina stands. We beat them from all counts. And this is the same for most other states, or to my knowledge, all states in the U.S. And the reason is that the U.S., continental U.S., has a very high tax rate. We have here a New York Times article which I brought, which came out last week. U.S. has the highest tax rate, the second highest, second to Japan in the world, at 35%. I think we forwarded this to you, and I can make this available if you want. For manufacturing, after all the loopholes and all of the different accounting deductions that you do, manufacturing is still 22%. But Puerto Rico is a much lower rate. And I'll show it to you in a couple of slides down, but this is something that you would like to consider when thinking about investing abroad. Would you?
Let me take a second to go over some.
Sure.
So, and by the way, feel free to stop us, at any point in the presentation. So, we love dynamic presentations, and if you have any questions, then raise them right away. Okay. So, some of the things that we would like to also point out here is that investing in Puerto Rico is investing in the U.S. Right? Now, not with the same kind of tax rates. I think a lot of people know, some of the benefits of investing in the U.S., including the stability of the global economic climate. But, like Eugenio was referring to in that New York Times article, everyone, or maybe most people know that taxes are very high in the U.S. and sometimes that's an impediment. Okay. But on the other hand, investing in Puerto Rico is investing in the U.S. It is a U.S. jurisdiction, and what comes with it is it's U.S. currency, U.S. safety regulation, and FDIC protection. The stability part of it. Now, the Puerto Rican law mirrors tenets and laws of the U.S., and in fact, the Puerto Rico corporate law is based on that of the state of Delaware. Okay, one of the most progressive laws. Okay. Now, Puerto Rico is part of the U.S. trade agreement, okay, which includes U.S., Canada, Mexico, Central America, Dominican Republic, Chile, Colombia, and Panama. Okay. When you take the population of all of these countries, include it within the U.S. trade agreement, we're talking about the 560 million population that potential business venture in Puerto Rico could have access to under the U.S. trade agreement. However, it's the punchline. Companies in Puerto Rico benefit from a foreign tax structure for U.S. tax purposes. Okay? Puerto Rico is a U.S. jurisdiction, but it's not a state. It's exempt from federal tax law. The Puerto Rico government is able to design its own tax structure. Now, when you're combining what you're getting versus, what you're getting versus where you're located, I mean, look at a World Bank doing business annual report ranking on protecting investors. Out of 183 countries, Puerto Rico ranked number 16 in protecting investors in any given jurisdiction. If you look at comparable Latin America countries, some of them bigger, actually all of them much bigger than Puerto Rico, you see that Chile is the closest one behind Puerto Rico at number 26. And Costa Rica is all the way at 167. This is something that when you're evaluating a potential business venture, investing abroad is important because you do want that security and stability in your investment.
If I may add in this area, in Latin America you have a long tradition of in the 60s and 70s there were revolutions, there were expropriations in Mexico. Some Latin Americans have gotten a lot more sophisticated in their takings. And so they'll change the constitution and retroactively say that this is not of national interest, and so it would not it would require a restructuring of a contract. This happens in some infrastructure facilities in South America. That cannot happen in Puerto Rico because there is this tradition does not allow it. Our relationship with the U.S. does not allow it for us to do any takings as they would in Mexico and other countries that have such traditions.
So in other words, you get the protections of the U.S. law towards, corporations and businesses, but on the other hand, you're not paying the U.S. corporate tax rate. Okay. Now, we want to show you how Puerto Rico outranks other U.S. states currently in terms of fiscal stability. I'm sure you have read in the news in the past couple of years, a lot of the U.S. states have encountered challenges due to budget deficits, okay, especially when the recession started in the United States towards the fall of 2008. Okay. Now, Puerto Rico, similar to other U.S. states, had its budget deficit challenges, but the government has taken very aggressive measures to cut expenses and bring down that budget deficit from 44% in 2009 to 11% of revenues in 2011. And as a result of that, and basically through witnessing this effort, Moody's increased Puerto Rico's general obligation bond rating by 3 notches from Baa3 to A3. Now, this is the highest improvement given to any of the 34 states whose rating is upgraded, Moody's, and the highest for Puerto Rico in 35 years. Okay. And in fact, just right around half a year ago, 6 months ago, Standard & Poor's raised its outlook on Puerto Rico's credit from stable to positive. Very, very encouraging and promising. And I'm telling you this, and this is maybe relevant for a potential investor because, again, it's that stability that you may be looking for. Fiscal stability is important because you do not want certain states, such as California, have been or is in talks to or plans to raise taxes due to enlarging budget deficits. Now, one of the things that Puerto Rico has, we argue, is a highly skilled and highly educated labor force. Now, it's, like Eugenio mentioned at the beginning, we've had U.S. multinationals investing, training, and working with the local workforce for at least the last 50 years. Okay? And this, and Puerto Rico also recognizes the importance of the educated. In Puerto Rico, by World Economic Forum Global Competitiveness Report, Puerto Rico ranks 14th in the availability of scientists and engineers. Okay. Now, Singapore is 10th and Taiwan is 8th, but Puerto Rico is not too far behind. Okay.
And Chile is number 24, so that's the second Latin American country that follows after Puerto Rico.
Okay. Now, University of Puerto Rico, the publicly funded university, is among the top 20 grantors of engineering degrees in the U.S. Now, we also have, a bilingual workforce. A bilingual workforce is important because, especially when you're looking at that gateway into both the U.S. and Latin American countries, or markets, right? You have the ability of your labor force to work with U.S. markets as well as Latin American markets in terms of services, perhaps after-sales services. Now, we have mentioned earlier that we have a tax incentive structure that's separate from U.S. federal tax structure. Okay? And here, we're going to show you exactly what we're talking about here. Okay. For manufacturing and strategic industry incentives, there's a 4% income tax on the industrial development income. Okay. This is the tax rate that many investors, many multinationals, or many manufacturing operations enjoy in Puerto Rico. Now, if a product is considered novel pioneer and it's manufactured in Puerto Rico, then the tax rate is further reduced to just 1% on income. If the product that's novel and pioneer is developed in Puerto Rico, then it actually is further reduced down to 0%. In addition to a very favorable and low income tax rate, we also offer a number of tax credits. For example, on purchases of products manufactured in Puerto Rico, or for the job creation, okay, or on R&D activities. We also offer special deductions on investments from structures, machinery, and equipment. Now, which are the activities that are eligible for such reduced income tax rates? Okay. As we have alluded to earlier, scientific R&D, recycling, hydroponics, value-added activities pertaining to port operations, data processing centers. Most of the manufacturing operations are covered under the incentive laws. So, in essence, the attractive tax proposal offered is meant to attract direct foreign investment, and this is a very, very competitive offer to most jurisdictions that compete with Puerto Rico. Now, going beyond, we're also, one of the strategic sectors is in tourism and entertainment. This is something that maybe some of you are more interested in than others. Tourism, in terms of tourism, 30% market share of U.S. inbound to the Caribbean. We have 19% market share of all Caribbean arrivals, and with 5 million passengers per year. So some of these are the assets of Puerto Rico's tourism sector. Okay? Now, in terms of the incentives, we also have a Tourism Development Act